when we think about what we expect to see over the second half of the year, I do expect that inflationary pressures will continue to build in the economy globally, but particularly in economies like the US, which are really going hard on the fiscal policy side of things. So I think that will put some pressure on bond markets as we go through the back end of this year.
Okay, what do you expect in terms of earnings for the second half of this year? Because that's been the hallmark that's been driving valuations, driving prices. And do you think that that momentum can sustain? Again, coming back to what we are seeing with the virus and the new variants and how that can impinge growth.
So we continue to remain optimistic about the outlook for earnings growth. But when I think about, where investors might need to have an element of caution, it's really more around valuations. So, we sit here today with markets, as you said, at very elevated levels, valuations, especially in, markets like the US at highs. And so even with a more robust earnings outlook, I think the thing that investors need to be careful about is the valuations, the price that we pay for the shares.
When we talk about the oncoming regime change, or maybe the already happening regime change in markets, you've got to ask yourself whether or not there's going to be a smooth transition as we hand the baton from the public markets, i.e. lots and lots and lots of stimulus, over to the private markets, and whether or not there is enough demand to be able to meet that. What are your thoughts on that, and do you see inherent risk in that transition?
So I think that looking ahead, I think investors should be prepared for an increased level of volatility. I mean, there's still a big debate in the markets about the outlook for inflation and the potential impact of tightening monetary policy. Again, I would expect that part of what will drive this transition going forward is the fact that actually inflation is more persistent in the economy, and that interestingly, that even if we do start to see the tightening of monetary policy, that may not allay it. In fact, if anything, it may stimulate the real economy even more. So I think that is one of the things that means that we will probably see more volatility as we go through the second half of the year.